Now, back by popular demand, it's the Lance Roberts Show.
And welcome to the show. It is 6:06 as we get things underway today on this Hump Day edition of the Lance Roberts Show. So glad you can join us this morning as always. Lots of stuff going on we've got to get into today. So yesterday, the markets had a nice gain yesterday on the back of really two things. One, the European Central Bank, which is the Federal Reserve equivalent in Europe, European Union. Mario Draghi is our equivalent Jerome Powell. Came out yesterday and said that, if things don't start improving soon in the Eurozone economy, in other words, stronger economic growth and inflation, that they're going to have to start cutting rates and potentially doing more quantitative easing. Of course, the markets like that because, that's liquidity. But the other news was Donald Trump, and we actually have written about this over the course of the weekend. We said that the market's really looking for two major things this week. One was some comments by Jerome Powell that he is moving more towards reducing rates, which that meeting ends today. And we'll have that announcement at 1 o'clock this afternoon. So if Jerome Powell comes out this afternoon and says, yep, we're going to cut rates, or yeah, we're really going to be cutting rates, or something very in that vein, markets should do well this afternoon. If he comes out and he's much more what they call hawkish, in other words, less inclined to lower interest rates, he says, hey, things are pretty good. And we're going to talk about this a little bit today. Things are really good right now. We're just going to kind of sit tight, wait, and watch. Markets may not like that so much. So we'll see. But the other big news, of course, that we said this week that was likely to happen is an announcement from the White House on a meeting with President Xi in China. And yesterday, Donald Trump tweeted out that he had a long conversation with President Xi and that they were going to be meeting at the G20 summit to discuss the trade issue. Again, don't expect anything to actually come out of this meeting. Again, it's just going to be more talk and more, kind of negotiating and posturing. But again, as we've talked about before, China has no real incentive in the short term to acquiesce to a deal that is not good for them in the long term. They can last long enough to allow the global economic pressure that's currently occurring to weigh on the U.S. economy. And then when pressure here gets great enough, then both sides are going to be much more amenable to just trying to get a deal done to get it off the table, right? So that's where these things are kind of headed. But again, good news yesterday on two different fronts gave a lift to the markets. But I do want to kind of talk about some of this stuff today because there's some interesting things that are going on. I thought it was interesting yesterday. Donald Trump came out after Mario Draghi with ECB announced that they were going to cut rates and potentially do more QE. He tweeted out that this was very unfair by the European Union to devalue their currency, which makes them more competitive against the United States. And they've been doing this for years, just like China. But that's exactly what he's advocating for us to do. So it's a little bit, like calling the kettle like a really dark shade of gray. Exactly, Cookware America. I mean, because the European Union is doing exactly what President Trump is advocating the Federal Reserve to do. And look, both sides are doing exactly what they need to do to offset weaker economic growth. Global economic growth is extremely weak. The U.S. growth is starting to slow down markedly here. A good sign of that is Winnebago just announced earnings today. Now, a Winnebago is something that you buy with a lot of extra discretionary cash, or if you've decided to live in a Winnebago and no longer own a house, right? So your personal upscale version of a tiny house. Exactly. So the point here is that, these are things, people buy Winnebagos when they're flush with cash, when they are feeling very, very good about the economy. They don't have any worries about their job or their income, et cetera. Right. A Winnebago for most people is a very, very discretionary purchase. They just reported earnings that were terrible, huge miss on revenues, which was what you would expect to see in a late stage economic cycle when things are beginning to weaken and people are starting to go, well, I really wanted to buy that Winnebago, but maybe I'll just put it off for a year or two. And let's see, we'll come back and visit this later because I'm not real secure about where I am. So it's not surprising that you see a decline in something that's an extremely discretionary and a big ticket item, right? It's not like putting off, buying an Amazon Echo for a few months. We're talking about a very, very major purchase for a lot of people. It's not like, you're, making $20,000, $30,000 a year and buying a Winnebago. So, you're talking about people that have cash, they have means to afford a Winnebago. And if they are delaying purchases, then that tells you a lot about the economic environment. So again, just something to think about because, we're trying to, Donald Trump is pushing Jerome Powell to do exactly what the ECB is doing. The ECB is doing what they need to do to try to support economic growth. Now remember this one thing about both of this, right? So Donald Trump is pushing Jerome Powell to lower interest rates and do more QE. These are emergency measures. These are things that you do in the midst of a financial crisis, right? This is where you're basically throwing as much fuel on the fire as possible to try to re-spark, the flame of economic growth. We've been doing emergency measures now for a decade, and we're at the very long end of a normal economic supercycle. So, doing more of this now before you actually have the recession is potentially setting up for disappointment because, again, what QE does, what low interest rates do, what lowering interest rates and what QE does is it drags forward future consumption. Those things work great coming out of a recessionary environment when people have a lot of pent-up demand. They need to consume. Optimism is extremely scarce. Pessimism reigns at that point. People are worried about their jobs, etc. So when you hit the system with liquidity, right, it's kind of like, a patient on laying on a gurney, right, and no heartbeat. So you hit them with the paddles and it jolts the system back into activity. Quantitative easing and lowering interest rates, that's when it works best, right? You get the best results from that. If you take a pair of paddles and shock a guy that's living, it doesn't really work out that well. So exactly. So, it's not that, the potential here is that people may be more disappointed about the results launching these type of emergency measures in the midst of a very long economic expansion. But we got a lot of stuff to talk about. We'll come back from the break. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.